So, you're thinking about jumping into the stock market. You've seen the headlines, the explosive growth, the talk of the next industrial revolution. And one name keeps popping up everywhere. Nvidia. Its graphics cards power the games you play, and its chips are now the engine of the entire AI boom. The numbers are staggering. If you'd invested just a few $1,000s a decade ago, you'd be sitting on a life-changing sum today. And now, as a beginner, you're re-looking at that chart going almost straight up and asking the million-dollar question. Is Nvidia a good stock for me? Should this be my very first investment? It's a thrilling but terrifying thought. What if you buy at the very top? What if the bubble pops? What if you lose money on your very first try? That fear is completely normal. My goal today isn't to give you a simple yes or no. My goal is to arm you with the complete picture, the dazzling potential, and the very real risks so you can make an educated, confident decision that aligns with your personal goals and your sleep at night factor. By the end of this video, you'll have a clear framework to evaluate not just Nvidia, but any high-flying stock, and a step-by-step plan for how a beginner should approach an investment like this. Let's demystify this together. First, we need to understand what Nvidia actually is today, because if you think it's just a video game company, you're looking at a small piece of the puzzle. Yes, their GeForce GPUs are legendary for PC gaming. That's their roots. But the seismic shift happened when the world realized that the same chip architecture designed to render realistic graphics in a game was also perfectly suited for the massive, parallel computations required for artificial intelligence. NVIDIA's graphics processing units, or GPUs, became the equivalent of pickaxes and shovels during a gold rush. Everyone digging for AI gold, from OpenAI and Google to every startup on the planet, needs Nvidia's hardware. Their data center division, which sells these powerful AI chips like the H100, is now their largest and fastest growing business segment. They've also built an entire software ecosystem around their chips, with platforms like CUDA, which locks developers into their technology. So, when you invest in Nvidia, you're not just betting on a chip maker. You're betting on the foundational infrastructure provider for the AI era. That's a much bigger, and some would argue, more compelling story. It's like investing in the company that makes the most reliable power tools for every construction site in a world that has suddenly decided to rebuild everything. Now, let's talk about the elephant in the room, the price. Nvidia is what's known as a growth stock. Investors aren't buying it for a steady, reliable dividend today. They're buying it for the expectation of massive profits tomorrow. This leads to a high valuation, often measured by the price-to-earnings ratio, or PE. A high PE means investors are paying a premium for each dollar of the company's current earnings based on future growth. Nvidia's PE has been historically high. This is the core of the risk for beginners. A high valuation stock is much more sensitive to bad news. If the company's next earnings report shows growth slowing down even a little, or if a competitor announces a rival chip, the stock price can drop 10%, 15%, or 20% in a single day. This is called volatility. As a beginner, you must ask yourself, if I put $1,000 into Nvidia and check my portfolio tomorrow to see it worth $850, how will I feel? Will I panic and sell at a loss? Or will I have the conviction and understanding to hold on? This emotional test is more important than any financial metric when you're starting out. Let's break this down into a simple pros and cons list for a beginner. Starting with the pros, the reasons why it's so tempting. Number 1. Sector leadership. Nvidia is the undisputed king of its domain. It has a technological moat and a software ecosystem that competitors like AMD and Intel are scrambling to catch up to. This dominant position is a huge advantage. Number 2. Riding a megatrend. AI isn't a fad. It's being integrated into every industry, from healthcare to finance to self-driving cars. As long as that trend continues, demand for NVIDIA's products should remain strong. Number 3, financial performance. Recently, their revenue and profit growth has been astronomical, blowing past Wall Street expectations. A company executing this well commands attention. Now, the cons, the risks you absolutely must respect. Risk 1, valuation and volatility. As we discussed, you're paying a premium price. Any stumble leads to a magnified fall in the stock price. Risk 2, competition and innovation cycles. The tech world moves fast. While Nvidia is ahead today, giants like Google with their TPUs, Amazon, and Microsoft are all designing their own chips. Competition will increase and margins could come down over time. Risk 3, cyclicality. The semiconductor industry has boom and bust cycles. We're in a massive boom driven by AI investment. A slowdown in corporate AI spending could temporarily hit sales hard. Risk 4, the priced to perfection problem. The stock market is a forward-looking machine. NVIDIA's current sky-high price likely already reflects expectations of incredible growth for the next few years. For the stock to go significantly higher from here, the company has to not just meet, but exceed, those already sky-high expectations. That's a very high bar to clear every single quarter. So, with all that said, what's the practical approach for a beginner? I'm going to give you a framework. Step 1. Define your goal and timeline. Are you investing this money for a down payment on a house you want in 3 years? Then, a volatile stock like Nvidia is probably inappropriate. That money should be in something safer. Are you investing for a retirement that's 30 or 40 years away? Then you have a long timeline that can potentially absorb volatility in search of higher growth. Step 2. Understand position sizing. This is the most important lesson for a beginner. You do not have to go all in. In fact, you absolutely should not. Let's say you have $2,000 to start investing. Putting all $2,000 into Nvidia is a high-risk, concentrated bet. A more prudent approach might be to allocate only a portion, say 5% or 10% of your total starting portfolio to an individual stock like Nvidia. That's $100 to $200. The rest should go into diversified, lower-cost foundations like a broad market index fund or an ETF that tracks the entire S&P 500 or NASDAQ. This way, you get exposure to Nvidia's potential upside without risking your entire investment on the fate of one company. It lets you sleep at night. Step 3, the mechanics of buying. If you decide to buy a share, you'll need a brokerage account. For beginners, user-friendly platforms like Fidelity, Charles Schwab, or even Robinhood are common starting points. The process is simple. You fund your account, search for the ticker symbol NVDA, and place an order. You'll see the main order types, a market order, which buys the stock at whatever the current price is that second, and a limit order, where you set the maximum price you're willing to pay. For a volatile stock, using a limit order can prevent you from overpaying during a sudden price spike. Pro tip: many beginners get paralyzed trying to time the perfect entry point. Consider a strategy called dollar cost averaging. Instead of investing your $200 all at once, you could invest $50 a week for 4 weeks. This averages out your purchase price over time and removes the stress of trying to catch the absolute bottom. Finally, let's talk about mindset and common pitfalls. Pitfall number 1, chasing past performance. Just because Nvidia went up 200% last year does not mean it will do the same this year. Past performance is not a guarantee of future results. This is the most important disclaimer in investing. Pitfall number 2, investing with emotion, particularly fear of missing out or FOMO. Buying a stock because everyone is talking about it and you're scared of being left out is a recipe for buying at the top. Pitfall number 3. Ignoring diversification. I cannot stress this enough. Your first stock pick, even if it's a winner, should only be one piece of a larger, diversified puzzle. The vast majority of professional money managers fail to consistently beat a simple S&P 500 index fund over the long term. That's your benchmark. Critical disclaimer. I am not a licensed financial advisor, and this is not personalized financial advice. Investing in individual stocks, especially in volatile sectors like technology, carries substantial risk of loss. You can lose some or all of the money you invest. Always conduct your own research, consider your personal financial situation and risk tolerance, and consult with a qualified, independent financial advisor before making any investment decisions. In conclusion, is Nvidia a good stock for beginners? It can be, but only under specific conditions. It can be a compelling, small-sized learning position for a beginner with a long-term horizon who has done their homework, understands the risks of volatility, and has built a diversified portfolio foundation first. It is not a suitable set-it-and-forget-it foundational investment for someone who is risk-averse or needs the money in the short term. Your journey starts with education, continues with a clear plan, and is sustained by disciplined execution. Use Nvidia as a case study to learn how to analyze a company, assess risk, and practice sound investment principles. Now, I want to hear from you. Are you considering Nvidia as your first stock? What part of the process makes you most nervous? Let's talk about it in the comments below. If this guide brought clarity to a confusing topic, do me a huge favor and hit the like button. It helps more beginners find this information. Subscribe and ring the bell, because next we breaking down how to build your first diversified portfolio from scratch with just $100. Thanks for watching, and I'll see you in the next one.